It's July 2nd, 2014, current time 11:10 GMT. Jay Meisler here with a daily Forex trading outlook. We are focusing on cable again today as it continues its breakout, as you see yesterday, above, well, that's 2 days actually, above 170.43. As you can also see right here, there is nothing in this area here. That's why I'm focusing on 170.150 and 172. If 170.150 is not established as support, we come back down towards that 171 figure to 50 range. If we can maintain 171.50 as a support, then the next risk is on 172. This is how I trade. We're in uncharted waters. We are in uncharted waters. As you can see, we do not have a lot of resistance in this area. Matter of fact, none on a monthly chart. You can notice that sterling crosses are driving it, specifically euro sterling, which has come down well below 80. 79.50 would be a logical place where we might see a pause. So you have to watch sterling crosses, and you have to watch sterling data, as that is driving the market. I saw one forecast from a bank today that rate hike could come as early as November. So if the market's moving up, the risk of a sterling rate hike, it's going to be supportive of sterling, but maybe more so during its crosses than versus the dollar. It really depends on how the dollar trades in general, and how then that's going to be driven by expectations of Fed policy. If you look on a weekly trend, look at that 20-week moving average. It is tracking the market. You want an indicator to use going forward? Use the 20-week moving average. As long as it's above it and the trend and it's sloping up, then sterling will be supported. If you look on a daily chart, that's all I'm looking at right now. On cable, I'll get down to the hourly and so forth later in the week. Here we go. Here's your daily chart. Similarly, I would use the 100-day moving average on the daily chart, although the 20-day moving average is moving higher as well. The breakout level here is 170, I would say 170.04, so we're far from that. But 170.43 was the breakout level on longer term charts, and that's the one you have to watch. So if sterling does back off for any reason, it'll be profit taking. Market will buy as long as it's above 171, but the stronger bid will be at 170.50. So that's cable in a nutshell. Now, 171, in the sum of 171.50, 172 could be a sticky level. So just beware in this area that you could run into some resistance. We only extended the high by 5 pips today, which tells you probably stops have been exhausted on the upside for now, unless we take out a new high. Now, if you look at two things today, by the way, you got the ADP report from the U.S. coming out at 12:15 GMT. Though it's not the most reliable, markets do react to it as a prelude to the non-farm payroll, and the expectations are it's going to be over 200,000. When you have Yellen speaking at 1400 GMT, from what I read just now, it's not supposed to deal at the IMF conference. It's not supposed to deal with monetary policy. So if she does mention anything, it will be significant, and the market will react. So just be aware of event risk at 1400 GMT. You saw yesterday I posted articles, links to articles. Here is one that it's very apropos for sterling. It's called a warning to all traders, especially at the start of a quarter. It's embedded here. Just click on the link. I strongly, and I mean strongly, suggest you read it, considering the price action to start the month of July in cable. That's it. Good luck, good trading, and we'll touch base tomorrow.